What is going on, investors? Back again. This time we're going to take a look at Verizon. We did AT&T the other day, and today we're going to take a look at the other big telecommunication giant here in the United States. Ticker symbol VZ. This stock, just like AT&T, reported earnings last week and actually reacted relatively favorable to the news, up a little bit, not a whole lot. What I'm going to do is talk generally about the stock. Then we're going to jump into the financials as well, and then finally I'm going to take you over to the stock chart of the stock, and then we're going to take a look at some places where you could possibly buy and add some shares. Now, full disclosure, I've recently purchased shares of Verizon. I'll show you where I bought them and where I'm not really looking to sell this stock, but where maybe possibly you could sell it if you wanted to play it like that. Now, this stock is traded in kind of a range for a while. We're at the $56 range, got a $235 billion market cap, a PE of a paltry 12.3. This stock is certainly traded lower than this PE, but compared to a lot of the tech stocks that a lot of people follow and are investors in, this is a very reasonable amount for a PE ratio at least. The dividend ratio, not as high as AT&T, but at a nice little 4.4% dividend yield. You're going to get $2.46 per share on this one, and they tend to raise it every year. Let's jump into the financials because this is what really matters the most. We got a 3-month ended here, and we've got 3-month ended back in 2019, and then we've got a 6-month view as well. Obviously, there's a lot of stuff going on in the world, especially the last, call it 3 to 4 months here in the United States. And so, for the revenue numbers here, we've got operating revenues here for the segment revenue to be down. I call it only 2.4% for the quarter is actually really nice. And if you stretch it back to a 6-month view to, include January and February when things were a little bit more normal here in the United States and around the world, revenue's very steady. This is why when you look at this stock, this is like a 2-year chart. This stock is kind of chopped around. I've added some trend lines here. This stock is chopped around in this range for the most part for the last 2 years because it's a very steady business. We see wireless equipment revenues here tick down quite a bit, 20% over the last 6 months. But one thing I want to point out here, here's the cost of wireless equipment. It cost them $5 billion to make 4.7. It cost them 4.1 to make 3.75. So they're obviously losing money. This is a loss leader business. So when you see something like this go down, it's not necessarily that bad of a thing. Now, it will likely lead to maybe lower costs, lower revenues at the top line, which is where they're trying to drive the bulk of this revenue. You see the top line revenue here of $54 billion. It only cost them $15.4 billion. So those are really, really strong gross margins on their main source of business. And that's why Verizon is a relatively consistent stock for especially dividend investors. Now, rolling down to total, so we have our total revenue here for 6 months is $62 billion. We spent $48 billion to earn that. We've got an operating income of 13.9, call it 14 billion. That compares we're off 10% from 6 months prior. I think you can probably give Verizon and a lot of companies out there a pass to be down 10% this year in 2020. It's almost like a throwaway year for a lot of people. Now, obviously, you wouldn't want this to just continue year after year, month after month. And with 5G coming and with the amount of investment that Verizon does, I think they could potentially turn this around relatively soon. Now, net income is still strong. You see that even though our top line went down, our operating income went down for the quarter, notice that net income actually went up for the quarter. So that's strong for Verizon. And for the 6 months, it's almost dead flat. It's down 1.2%, which is a very small amount when you're at these big numbers here. It's basically a rounding error. So net income, very, very, very strong for Verizon. Now, moving down to the balance sheet, let's see how well capitalized Verizon is, because this is a company that needs to invest a lot of money to maintain their network and build it out. They need to they do need to advertise and things like that, although that's a smaller part of what they do. And then we'll get into it. They have lots and lots of debt on the balance sheet, and so they need to service that as well. We'll get to that in just a second. So we've got a year-end view here. We stretch it out to 6 months. We went from 2.6 billion in cash all the way up to about 7.9. That's a $5.3 billion increase in cash. We know this is probably not necessarily due to operations, because this is a pretty hefty amount of cash to flow onto the balance sheet. So you know that they probably raised money during the quarter or during the last 6 months here. Now, moving through here, most of the assets for these companies, AT&T and Verizon, are held up into this property, plant, and equipment. And this stuff is worth something. Think about it. If Verizon said, I want to close, or I don't want to do business anymore, well, there'd be companies lining up for all their infrastructure and all their technology that allows cell phone service and internet and TV and all that stuff to happen. And so this property, plant, and equipment is actually worth something. And so they recognize it here on the balance sheet. We can see look, so we got $293 billion in total assets. Look, 272 of it is in this property, plant, and equipment. So now that ties it up, okay? It's a little bit different than some other companies that you might analyze, like a Google or a Facebook or even like a Tesla or something like that. The bulk of this company's assets is tied up in infrastructure. And so it does give you, I think, a little bit level of safety and a little bit level of confidence, even as we move through here to the liabilities. We see debt maturing in 1 year. It's actually paid down a little bit, likely because I would guess that they refinance. This is just me guessing. I would guess that they refinance debt, push the terms back. It's almost like, think about it as like refinancing your mortgage, or maybe like getting a no interest credit card balance transfer offer or something like that. You basically take debt that was due very soon and then you stretch it out to a later maturity. That's what I would guess would happen here, because as we come down here, here's long-term debt. We went from 100 billion, boom, down up to 106 billion. So think about that. So we've got 7.8 billion in cash. We've got this receivable number here. We've got credit losses here. I actually wanted to talk about this. So we've got doubtful accounts here in the previous period, and then we've got it here. This is actually pretty encouraging. I would actually expected this to tick up a little bit more considering the things that we have going on, but it seems like Verizon's business is holding up relatively well. This is a relatively small number when you factor in how much revenue that they're generating. Obviously, you'd like this number to be back here in this 700 million, but times have changed, things have changed, but doubtful accounts are still there. But again, we've got $7.9 billion in cash. We've got $6.6 billion in debt due soon, and we've got another 106 billion due in the long term, among other liabilities. Okay, we got total long-term liabilities here of 190, and we've got current liabilities of 38 billion, and we have 7.9 billion in cash. For the average investor, or maybe the new investor, if you're new to this, you might be wondering why this isn't a penny stock at this kind of balance sheet. Well, it's because Verizon, we went through their top lines number just a minute ago. It is extraordinarily consistent, and this is a company that can continue to service their debt because their business is so consistent. And it's one of the last things you're probably going to do, even in times like these, is cancel your cell phone service and cancel your internet. In fact, you're probably relying on your internet and your cell phone even more than you did before. So moving on, I wanted to show you guys one last thing. Actually, let's look at the cash flow, and that's what we'll end on here. And then we'll jump to the stock chart. I'll tell you where you might want to buy this stock. So we've got net income here. We pull those numbers down. This is how cash flow statements work. So you pull a net income number down, and then you start adding back stuff since this is cash flow, you start adding back things. Net income actually makes you recognize stuff that's non-cash, stuff like depreciation here and change in current assets and liabilities. So these things are not necessarily cash. Deferred income tax, not necessarily cash flowing out of the business. Employee retirement benefits, while that cash might flow out at some point, it's not necessarily flowing out now. You're just recognizing it in the net income in the operating income statement. So we've got cash flows here are extraordinarily strong, and that's what you're looking for when you're looking at Verizon, because if cash flows start to become weak, then yes, the debt and servicing that debt and servicing all those expenses becomes difficult because they don't have a lot of cash to service those debt. But when the business is this strong, you go from $15.9 billion in cash flow all the way up to call it $24 billion in cash flow. That is extraordinarily strong. And then you look at the investing activities, they constantly have to do capital expenditures, build out new infrastructure, phone lines, and the microwaves on top of the cell phone towers. So you see very strong quarter with that. I actually like to see this for Verizon. It means they're building their competitive advantage. They're building out their technology to serve their customers even better. We see cash flowed out. This is always flows out in a company like this. They did 8.6 billion and we ticked up to 12.1. Now, cash flows from financing, this is where the CFO of Verizon earns all his money, because he went from 6.2 billion all the way up to 9.3. Those are proceeds from long-term borrowings here. Now, finally, though, look, we went from net cash used in financing activities actually went down a little bit, and that's why our cash ticked up here. So really strong quarter, I think, from a cash flow perspective, and I think that's what investors kind of saw here. We actually saw, I think earnings were somewhere in here. We see the stock actually traded up from 56, up into 57. You see, we're getting to a top of a channel here. We made a high here. We made a high here. It's lower. If this stock stalls out right here, doesn't break this high of 58, then I think this stock will probably actually, we see we're kind of in a downward trend here. We could even put a line here if we wanted to. We had a top here like a lot of stocks, and we're kind of downtrend. Now we popped out here, and so it'd be nice if Verizon, if you're long this stock, it'd be nice if this stock went back to the top of this trend. But I think this stock, like a lot of stocks, is probably going to have trouble coming back to these highs that it made back in this range up to the $62 level. In fact, if it gets back into this range, I'd probably look to lighten some of the shares. I probably have about 100 shares of Verizon at the current time. Now, I bought my shares. I didn't hit this low down here at 53. I was up here closer to 54. I think I was just under $54. I kind of saw that this stock hit the bottom of this range. We see here, this stock bottoms here, bottoms here. I mean, this was 2 years ago. Bottoms here, bottoms here, bottoms here. It broke here. We see what happens when the stock breaks trend. This is something that you want to be cognizant of. When the stocks break a long-term trend. So this stock made a trend here, and then when it broke it back here in March, it boom chases to the upside. This is why you see stocks either overreact to the downside, and they also overreact to the upside as well. So this stock really broke down, went all the way down to $49 a share, but has recovered nicely. Will we retest these lows? I don't know. If we do, I would consider there'd be lots of support. Look at all these volume down here. This is volume right here. There's a lot of support for this stock down in this range. I definitely would like to be buying. And again, that's only $4 lower than where I was buying the stock, so I wouldn't mind buying it here. I definitely, if you want to be ultra safe, you could probably set a stop loss under this $49 level, because if the stock breaks that level, I mean, all bets are off, and probably really, really bad things are happening in the economy, probably across the world. But I like this stock. I think it has the potential to come up here and maybe retest 58. I don't think I would like to be accumulating the stock up in this range, because I think the odds of it, say I have this trend line here right at about $59. I think the odds of this stock kind of bouncing its head on here is kind of pretty high. I think the odds of it doing that are high, and it'll retrace back here. I think I like this stock at the 50. If you want to jump the gun a little bit, this $55 level has provided some support over the last few years, but more ideally, I think I'd like it. If you want to really be picky and stuff like that, I think the $54 range, that's where I picked it up. I think I picked it up. One of these bars is where I'm at in this stock. And so that's where I like it. Whether or not it works for you, again, this is not investing advice. I'm just showing you my opinion. I think if you really want to be ultra safe, I think coming down here at 53, if the stock were to bounce back off of those lows, I think that would be an interesting one. But again, you've got to worry about it. If it breaks breaks this 53 mark, it's probably coming all the way down here to 49. So those are just some things you want to think about. This stock is kind of in making lower highs. We see high, 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 and it finally broke out here. So that's actually a positive sign. If the stock's able to keep up here, it should trend up. So if you're holding Verizon shares, I think you've potentially got some upside. If you want to sell them when they come up here to $59, $60 a share, I don't think anybody's going to blame you. But for me, I hold this stock for the long term. I was probably closer to a 5% dividend when I bought into these shares. I let that stuff reinvest. If I need that money at some point, I think I might in the next year, I might move on some real estate and things like that. So maybe I sell it at that point. But if not, I'm going to be paid 5% to wait. So there we go. That's Verizon. Hopefully you guys enjoyed this video. Maybe consider hitting that subscribe button, that like button. Guys, you guys are doing that amazing. My channel has grown exponentially over the last few weeks, and I look forward to being with you for a long time here on YouTube. Really appreciate all the support and all the comments I've been getting, both negative and positive. I love reading what you guys have to say. Thanks for watching this video. We'll be back again all this week. Good luck with your investments.